Hello, and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. These are companies that provide a tremendous amount of financial support for our association, in large part so that we can remain the strong voice for the real estate finance industry before the California State Legislature and our regulators. And those companies this year are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2024. We really appreciate it. And with that, I'd like to welcome a friend of mine to the Connect podcast, Phil Rasori from MCT. Phil, good morning.
Good morning, and thank you, Susan, for the invite. Really appreciate it. We've been on your podcast multiple times in the past, but this is the first time I get to be interviewed by the big dog. So I appreciate it.
I think the last time, it's funny that I was thinking about this when we do it. I think the last time it was a few years ago, it was when Dustin was still there, and I heard your very distinctive voice, and I just ran into his office and I'm like, hi, Phil. I'm like, I know who that is, that voice, the radio voice. So I kind of wanted to start off and tap into your, your expertise in the market. We are, you've had a good history in the mortgage industry. We're coming off, of course, a really tough year in 2023. How can lenders stay competitive in a purchase market?
Yeah, well, it's absolutely a question we get a lot. Our lenders obviously know a heck of a lot more about production than we do. Kind of the specific issues that we see in capital markets really since, and this has really been a broken record of an issue ever since, call it Q4 into maybe Q4 of 2021 into Q1 of 2022, as we've transcended up coupons kind of relentlessly until end of Q3 of 2023, and then we had a brief kind of breather there, but it has really been trying to figure out how we can get the best premium pricing available, and there's obviously not much premium in there. Obviously that's important for a purchase market where for those purchases that are not builder subsidized buy downs, getting that premium is important. And so we've been focusing on tools that allow for transparency into those higher coupons. And again, when I say higher coupons, it's just because we kind of continually transition into these higher coupons. It seems like, again, we had a nice Q4, and then at the end, beginning of this month, here we are transitioning back into the 6.5s from the 6s where we've been a long time, and that really kind of pushes the need for 7 coupons and even 7.5 coupons where the liquidity gets bad. And so although the premiums just in general, premium pricing isn't what it used to be, you can, by taking some of the illiquidity away of those coupons, you can help yourself get as much premium execution as possible. So those are some of the things that we've been working on, and no question, it's a purchase market. I think that hopefully as time moves on, I think we're all kind of hoping that some of this equity that's built up, this record equity that's built up, will eventually transition into some more financially feasible cash outs. But the last few weeks hasn't helped, as we've seen a rise back in rates.
Yeah, that's it is still tough. I hear from my members, your clients, that many of them are hopeful that there's a little bit of relief in maybe the coming months. I'd love to hear kind of your outlook for the balance of 2024.
Yeah, I think look, all of your members follow the market real closely, so they're all, everybody's pretty much in tune with the real shift that's unfortunately occurred after non-farm payrolls of this month covering March. And then of course that was hit by a 1-2 punch with the following week CPI coming out stronger than expected. So I think in our minds, I think in most people's minds, we're going to really have to wait and see. Really, it's only going to take a couple weeks, till those May numbers come out covering April's jobs, and I think that's going to really kind of cement us in. Already, you really don't get a probability of a rate cut. July, I was just looking at the Fed Watch tool of the CME group, and July has it at 37%, and you don't get out till not till you're at September. We get a 45% chance of a cut. So that's a long, that's a big difference from where we were of a probable June rate cut, which now
Right.
it's like 16%. Very rare, very low chance. It would have to be a horrendous jobs number probably, and we just unfortunately for our market, we have not been seeing those horrendous jobs numbers. We've been seeing seems like every just blowout numbers. So that's definitely pushed back. I think everybody's in agreement. It was great. We had Mike Frattantoni at our conference, and he was he's still in the camp of later this year. Definitely the rates coming down. And I think we can, we all can agree that makes sense. But also we can all agree that we do have to see these job numbers come back in line, and inflation kind of continue to be in line, and not kind of reassert itself.
Got to hang on for a little bit longer. It's been a tough 18 months, I will tell you, and I know you know from your clients as well. So let's switch from market outlook to MCT in particular. I'm always fascinated by your company is so forward thinking when it comes to technology and innovations. Talk to us a little bit about the latest technology solutions MCT is offering.
Yeah, well, thank you for that question. I think, like I said, in what we've tried to do for our lenders throughout this market, as the market changed from QE to QT, is really focused a lot on understanding that there is a liquidity problem in TBAs, and so we've worked a lot with electronic trading of TBAs, in partnership with agile trading technologies. That's helped a lot for TBA executions. But then also we've recently done a lot of work on what we call base rate generation. So this is allowing our clients to generate house pricing that matches their best back-end best execution model. A big part of what MCT does is we manage and help our customer manage the back-end best execution process. And I think everybody would agree that if at all possible, you want to get your front-end execution that you're creating that rate with, or that base pricing with, you want to get that as close to as possible as your back-end execution. And so that, and then that rate sheet that's created is pushed into the customer's product and pricing engine, whatever they use. But what kind of in doing that, we've realized that it's real hard for lenders who are, especially for those that securitize, that are able to, again, on the higher part of the rate sheet, it's hard for them to get an accurate picture of what those securities are trading at. Frankly, because a lot of them don't even trade on the screens that are out there. So we've been able to generate or develop an electronic indications, an ad hoc indications tool, or rather than calling up a broker dealer, you can just send out a request for an indication. Your broker dealers will give you that indication back, and then you're able to put that in your rate sheet. It provides a more clear picture through that, what we call an RFQ, a request for quote process. So through Agile Trading Technology. So that's been a lot. We've done a lot of work on the liquidity side. Really, and then it wouldn't be we always say it wouldn't be a MCT interview if we don't mention AOT. We've pushed a lot of work with the investors. A lot of the investors have done really yeoman's work on working with their capital markets teams to allow AOTs. But that's a big piece of the puzzle here as far as getting your best execution, because while a lot of our clients or lender clients are approved with the agencies, as you know, the approval process at Ginnie Mae has definitely slowed, and it's not extremely fast. So that means that a lot of our customers are not able to securitize and trade on swaps. So they actually have to deal with this bid offer spread that's very wide, that causes a lot of cost in the loan sale process, a lot of friction. And so the AOT is just simply essential for FHA production. That's just the bottom line. And right. So we really want to continue to work with the aggregator community to really make it where we can, in the future, the holy grail being all FHA production is delivered on an AOT basis.
Anything to streamline the process, right? That's what we're all striving for, and to hopefully reduce those the cost to originate a loan and create a better customer and lender experience. So thank you for all the great work that MCT does to lead the way as how to do that. Your company has been a longtime supporter of the California MBA, and very, very grateful for all those years of support. But I'd love to have you share with our listeners why you choose to support the California MBA.
Well, look, I mean, it's not just because Susan's interviewing me here. I think there's no question that Western Secondary is really considered by most of it. And I guess I would say I'm a little biased. I'm a California guy, so but Western Secondary is really considered the third kind of national conference by by the industry, and there's really no other state conference that competes with it, and that's all because of you guys, doing a great job and have a great team. And I know that you do a lot on the political side. We because we've stayed laser focused in the execution side, we don't get as involved in the state political side, because again our kind of the execution side, if you think of FHFA and kind of the FINRA, things like that, that's more on the federal side. But our clients always talk about how much you guys do, and so we always will be ardent supporters of CMBA and really appreciate everything you do for our customers.
Well, thank you, Phil. I appreciate that. And thanks for being back on Connect. It was great to speak with you. If I don't see you before, I will see you at Western Secondary Market Conference.
No, we're excited for it. And I really appreciate you allowing me to come back on.
Yeah, excellent. And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.